Soybean prices have been taking farmers and investors on a wild ride this year. Joining us is Chris Robinson to talk more about what he sees as a trade of the day. So thanks for coming on the show.
Hey, nice to be here. So what we were looking at is, if you pull up a chart of March soybeans, which is the spot month, there's two critical areas there when you look at things technically. There's a big trend line there at this 930 level. There's also the 200-day moving average. So technical analysis, the old phrase is, if technical analysis worked all the time, there'd be no cab drivers in Chicago, right? It doesn't work all the time, but when you get a lineup like that of a 200-day moving average and a trend line, take a look at it. The reason I like trading trend lines is because you get every bull and every bear, so it's kind of a line of scrimmage. So it gives you an opportunity. A breakout above or below that level could be significant. So it's the type of things we look for a lot.
So what would be a trade, maybe hypothetically even, or for real?
For real, yeah. Well, I would say this. It doesn't matter if you're a bull or a bear. Whatever you put on, make sure that you know where you're going to get out before you get in. So where people get in trouble is that they put a position on and it runs against them and they don't have a plan to get out. So because we have this specific area, I would look at options right around that 930 level, and you have a plethora, there's a big word for you, of choices. You have weekly options, you have options that go for about 17 days. So I would take a look at that, and if you're not familiar with those, you really need to educate yourself, because the thing I like about options is they limit your risk. You know that's the most you can lose if you buy that option. Where you get in trouble is if you start selling options you don't own. But for a spec trade where you're looking for a move above or below, it's called a straddle, where you buy a put and buy a call. One of them's going to go worthless. One of them could make you a lot of money. And so I would look into that if you're looking for an opportunity.
So you have exposure to both sides, the up moves and the down move, no matter what happens.
Right, especially when it's right up against a significant technical level. And again, it doesn't always work. Worst case scenario, you're going to buy an option, buy a call option, buy a put option, and they'll both go worthless. But also, if we do get a move, one of them could be a good payoff.
What is the aroundish implied move of that straddle?
Well, roughly, if we're in about a 60 to 80 cent trading range. So theoretically, if we get a big move, you could have a 4 or 5 cent option today, which could be ended up being, doubling or tripling on a move if we break out of that range.
Well, thanks so much for coming on the show.
Okay, thank you.
Check out businessfirstam.com to find out where to see our entire show. And don't forget to like, follow, and share Business First AM.